Yeah. So, according to both of you, why do you think that there's a higher failure rate in Forex? Why do you think a lot of people lose money in Forex trading?
I would say it's because of lack of trading psychology.
Trading psychology, okay. Tandy?
Lack of knowledge.
Lack of knowledge, eh?
Yeah, lack of knowledge.
Can you elaborate more on that one?
Yeah, when you don't have the knowledge, just go in anyhow without even knowing what you are doing. And now, when also you don't have the knowledge, you always want to even just get involved with people that are just going to send you signals that you don't even know how they analyze. They'll send you a signal, you just get into it without even knowing what's happening. Before you know it, you don't know. But if you have the knowledge to save the signal, yes, signals are good. You save the signal, you analyze it as well, then you execute. So for me, I think mostly it's also lack of knowledge.
Yeah. So your network is, your voice is kind of bumpy. I don't know what's happening. It's not clear. It's kind of not clear.
Okay.
Yeah, you're not. Yeah. You're using headset? You're using headset?
Yeah, I'm using headsets. Yes, I'm using headsets.
Yeah, better now. Okay.
Yeah. It was hitting against my earrings. Yeah, I know.
Okay. No, I think we're able to get you. We got your point. It's true. So just like Darlington has said, it's lack of knowledge. Lack of knowledge also just psychology as well. That's knowledge, right? Studying psychology and all that. So it all comes back to the same thing. So it's lack of knowledge. People suffer because of lack of knowledge. So, for example, imagine that when you just heard about Forex trading, someone told you that you were actually going to lose. Because no one talks about that. Right?
No. The best impression is you're going to win.
Yeah. So no one tells you that actually you have to learn how to lose. And I think it's going to make so much of a difference if you were taught in the beginning that, okay, actually we have to learn how to lose and how to win long term. I think it's going to be a different situation. Right? But
yeah, exactly.
Yeah. But the thing is that what sells out there is telling people that you have a 90% win rate. You are going to actually make money. You can triple your money in 3 days. That's what sells. That's the reason why you see these people like having a lot of people going to them, because that's what that. But it's a marketing strategy. People don't tell you the truth. People are not told the truth, like what really happens in this particular market. So people come with that mindset to trading with hope that they're going to make money right now, without an actual understanding of the market, without having any strategy. They will follow signals, because if the signals can just be okay, but if you don't know how to trade yourself, you still mess it up, right? You can have a right signal, but if you don't know how to trade yourself, because trading is not about just strategy. There's an aspect of psychology there, trade management, all those important things. And if those things are not discussed with you, it becomes something else, right? It becomes something else. So that's the reason why I think going forward, I'm focusing more of building a community. I think I'll be moving away from signals a little bit. I think not a little bit, actually on a bigger scale. I'll be moving away from signals. What I want to do is I want to create a community of traders who trade the same thing. So now I'm implementing the Lieftime mentorship, where you're going to be part of the community, and then we're going to be sharing our signals or our trade ideas in that particular group. Okay, So if you have you're looking at certain pairs, then you can send your allies like, okay guys, I'm looking at this, and then also being having a community where you have accountability partners, where you be like you have someone to hold you accountable, because when you're doing this on your own, it's easy to make those small stupid mistakes that you can make in terms of position sizing and all that. But when you have someone, if you have someone who's going to be looking at, okay, let's see what you did. Okay, how did you do this week? Okay, let's see. It becomes easier like that. Okay, and like just a community where, so that's where I'm going at right now. I think we need to build a community where we're able to like ask questions, like we're able to interact as traders trading the same thing. So, but before we can get to that, we all need to understand the concept and how it works, and really have to believe in it and have that conviction in the strategy and everything else. Right?
Yeah.
So that's the goal, so that we can become a community of traders who are trading the same strategy, and we can just help each other grow like that. I'd like to see a lot of us get funded, a lot of us consistently extract money from the market, especially using the prop firms, right? So that's kind of my goal right now. That's what I'm looking at right now, so that we can become that kind of a community. So I'm slowly moving away from Sigma, because what I want is for us to have a community. Yeah. So that's the thing. So it's knowledge is the most important. Once you have the knowledge, it becomes easier to execute. It becomes very easy to execute. So Tandy she's now able to analyze. She analyzes pairs nicely. You remember the AUD card and the NZD card for last week?
Yes.
Yeah, like Tandy was able to actually analyze the same pairs. I was surprised. I was like, okay, because those we analyze exactly the same way, and I was impressed. I was like, okay, this is actually very good. So we need to be speaking the same language.
That's very good.
Yeah. So and then we share our trade ideas in the group, and then at a particular time, because maybe some of us we have other things that you're doing, maybe you'll be at work, and then some of us maybe by a particular time you just be at home or anything else. Then you can send your setup. Look guys, I'm looking at this setup. Look at this. What do you think? Then we contribute. Someone contributes like that. If you're taking a setup, right, you guys, I'm taking. Yeah, so that we're able to grow as a community like that. Yeah. So, Tandy, any challenges so far? Are you having any challenges? We cannot get you.
Don't turn the habits executing. Sometimes what like something say it doesn't mean if you are late, doesn't mean that you can't do it. But for as long as you know the strategy, you can still end at some point. I don't know if you understand what I'm saying. So I was trying to reflect on that, because me, for as long as it's there on top of this, maybe just one then
so we're not getting you. We're not getting anything.
So I'm saying, me, the only challenge I'm having is that when to execute. I can analyze quite all right, next maybe on a Saturday. I just get busy. By the time I get to read, then it has moved maybe a candle, then I'll say a missed entry.
So executing is in terms of confirmation or what?
Yeah, confirmation also. Confirmation. I think that's the problem. Confirmation is the problem.
Okay.
Analyzing, I know how to analyze. I can analyze the whole thing, but I won't execute it because I was saying, is this confirmed? You know what I mean? Hence, I miss up on most trades. Yeah.
Okay. All right. So, Darlington, from so far, like, do you have any questions?
No questions yet. No questions yet.
Really? Okay. That's interesting.
Yeah.
Okay, so let's just go. Let's just do this. Let's just do this right now. So let me just do this so that we go through the setups to go together. Okay. So here we are. Here we are. Like probably you've seen from the book and maybe from some of the videos. These are the three parts that your setup is supposed to have. Okay, these are the three components that your setup is supposed to have. This is the Quasimodo strategy. So the first part is what we call the past. So I bet you have basic understanding of price action, right?
Yeah. Yes.
Okay. So what you have here is a market which is in a previously is in an uptrend or downtrend. So you want this market to be in a trend previously. Okay. So in this case, this is a sell setup. So this market has been in an uptrend. All right. So making higher highs, higher lows, and higher highs. So in this case, the market created a high, a low, and a higher high right there. So this is what we call the QML, the Quasimodo level right there. And then, so in this case, what we have is what we call a dual resistance QML, meaning it had two levels which were respected as resistance. And then therefore, we always look forward to price breaking up that resistance because there's always going to be liquidity above that. Retail traders will be trying to sell at that level. Therefore, we want to look at price taking out that liquidity zone right there. And then, so in an uptrend, the market, for it to be in an uptrend, the market should be able to continue to break the higher high, right? So for an uptrend to continue, the market has to continue to break the higher high in order to form a new high, right? That's what we call, that's a continuation of an uptrend. Higher highs being broken, higher highs being broken, higher highs being broken. And then I think we've had these two terms being being used interchangeably. There's the BOC, which is the break of structure, and the change of character. Have you seen these two names before? These phrases, change of character and break of structure. Have you seen this?
I've seen BOS before.
Yeah, so that's what I've been using. But so a break of structure is a continuation of a trend, right? So when the market breaks this high right here and creates another higher high right there, it broke structure. So previously I was also using this break of structure here as BOC. However, this break of structure, what does it signify? When the market breaks this higher low, what does it tell us, Candy? Hello?
You're saying when the market does what, where?
When the market breaks this higher low, what does it tell us? Right? When the market breaks this higher low.
There's a break of market structure.
What does it tell us?
I don't know. I forgot.
Change of direction?
Yeah. So it tells us literally that the market is changing direction. Therefore, we're not supposed to.
Exactly. Yeah.
Yeah, we're not supposed to call it break of structure. We're supposed to call it change of what? So it's a change of market
Change of
direction.
character.
Yeah, change of character.
Okay.
Yeah, so the market has changed character from being an uptrend to a downtrend. You understand that? So this is no longer an uptrend, but a downtrend because the market has changed the character. So here, we'll no longer be using the BOS, we'll be using change of character instead of break of structure. So the break of structure is when the market breaks this higher low, this higher high right there, and creates another higher high. You understand?
Yeah, exactly.
Yeah. So is that clear, Tandy? Hello? It's clear, right? Hello, are we together?
Very much together. It's clear.
Okay. So here, this one becomes a change of character because the market is no longer in an uptrend and it's now going to go in a downtrend, and we're anticipating that the market is going to change direction like that. So we have a QML and we have a change of character here, which is the higher break of higher low here. And then after that, so this is the high, low, and higher high. The market breaks this QML, which is the higher high, and creates what? A higher high right there. And then remember, there's sometimes you're going to have what we call the MPL, and sometimes it's not always going to be there. So don't force it. If it's there, it's going to be very visible. So don't try and force it. If it's there, it's going to be visible. If it's not there, don't force it. Right? So we have a QML, we have a low, we have a higher high, have an MPL, and then we have a break of structure, which is a change of character right there. And then after a change of character, what are we expecting? We're expecting the market to give us what? A lower low, right?
Yes.
And this is a lower low which was created there. The lower low has been created. So this is what we call the past. Okay, so this is what we call the past. So in the past, we are looking for the higher high, the QML, the MPL, and the change of what? Character.
Change of character.
And the lower low. So this is what you are looking for, where in the past, you're supposed to have this in the past. Your higher high, your QML, MPL, a lower low, a change of structure, change of character, and lower low. Of course, there are some exceptions. Okay, so simply put, the QML, it doesn't mean that it's always going to be there. There'll be setups where the QML is not there. You are only going to have a rally-based drop supply zone. Remember, guys, it's supply and demand strategy. It's all based on the supply and demand strategy. Yeah. So sometimes you have setups with no QML. As long as you have a visible rally-based drop supply zone, that's good enough. Okay. So that takes us here on the higher high right there. So what kind of a rally-based drop supply zone are we looking for? So we are looking for what we call extended range candles. We're looking for momentum candles. We're looking for inefficiency candles. What are those candles look like? Well, how do they look? You're going to realize that these are big momentum candles. So maybe you're going to have the market pushing to the upside with momentum candles right there, like that. And then you're going to have a small consolidation right there. Okay, a small moment of consolidation, and then you have big momentum candle breaking to the downside. So what kind of supply zone is this? What kind of supply zone is this?
Which one?
What kind of supply zone was formed here?
It's a rally base drop. Rally drop base.
So rally base drop.
Yes.
RBD.
Yeah.
So that's rally base drop supply zone. Okay. So this is a reverse. Yeah, this is a reversal kind of supply zone. Okay, it's not a continuation, so it's a reversal kind of a supply zone. So therefore, when we spot something like this, and these are going to be very visible. You are concentrating on a candle which looks big like this, especially the one that breaks this the higher low right there. The one that's going to break that level there. That's the one that you're concentrating so much on. Okay, usually this candle will have only small wicks. So let me just do this. You might have just a candle like that, and then you have another candle dropping. Okay, you're going to have something like this, and then with this candle like that. Okay, so this will have a wick, a small wick, which won't be let me just draw that. Okay, so for example, that's a wick right there. I know it looks bad, and then this wick here is going to be just a small wick, and you realize that there's going to be space in between this wick and that wick there. Okay, and when you spot that, that shows you that the market was not efficient. So there's an imbalance which was left behind. Okay, that's the reason why you have to go up, look at that particular big candle. Before that big candle, there's always going to be a consolidation. And that's what you're interested in. You find that consolidation, and then you do what? You get the last candle before the drop. That's your level. That's your consolidation that is supposed to wait the market to come back to. That's your rally based drop supply zone. You wait for the market to come to that consolidation. Okay, then once the market comes there, you don't sell blindly, you wait for the market to give you confirmation. So sometimes you won't have the QML. Sometimes all you're going to have is the rally based drop supply zone, and that's good enough. As long as you have that, that's okay. Find your entry, and then you are good enough. You can go. So this is very, very important. I'm sure you've been seeing the most setups right now. The actually working out, those that are actually working out, they have big momentum candles. Very, very important. So that's what is happening in the past. Okay, are we clear?
Yes.
Any questions from here?
No questions from me. So.
Okay, yeah. So another thing you can be doing is that you can put a horizontal line on top of that higher high right there. Put a horizontal line on top of the higher high, and look to your left, zoom out and look to your left. If that particular setup has got areas where the market was coming back to that higher high right there, just know that has a slightly less chance of working out, because it's most likely going to be used as liquidity. So you can manage. Of course, at the end of the day, we don't know which trade is going to work out. However, what we know is that that particular setup might have a slightly low probability of working out. However, we can manage our risk. The most important thing is to actually manage our risk. On a trade by trade basis, we have no idea which trade is going to work out. So the only thing we can do is manage our risk. Identify the setup and manage the risk. The way this higher low is broken is very, very important. You're looking for big momentum candles right there. If you have a QML, make sure that it's a valid QML, it looks very good. And then if you have a dual resistance QML, that's even better because that also adds on the confluence. Then this break change of character, make sure that the market has actually broken this higher low. Make sure that there's really a break in the higher lows right there. So after that, what we have is what you call the present. This is the present right here. So in the present, what are we expecting? So in the present, the market, it can come to us in different ways. Okay? The market can come to us in different ways. The market can come to you in the form of a fake out, and it can come to you in the form of a compression or a diamond setup. So that those are different types of setups that the market is going to come to you. However, what I want you to concentrate so much on is a fake out type of supply zone. A fake out which will look like this, where the market acts as resistance and creates more like a double bottom, double top, or triple top. Usually the market is going to break that resistance and then head up to that level where it's supposed to go to. So at this level, you can have, well, we have the resistance 1 and 2 or 3. Okay, so it can be anything. It can be resistance, or it can be a trend line. You can have a trend line, for example, if it's let's say market is just coming like this, coming to your level like that, dropping. So this will create what we call trend line liquidity. It can be like this. Okay. So once you see this, you will know that above here there's liquidity. Above there's going to be liquidity. And our job is to identify where the liquidity is and wait for the liquidity to be taken out. And once the liquidity has been taken out, then we can go and wait for the confirmation, then we sell or buy. We don't want to find ourselves as liquidity. We always want to wait for the liquidity to be taken out. And once the liquidity has been taken out, then we wait for the confirmation. Once we have the confirmation, then we can buy or sell. Okay, so it won't always be just a resistance like that. Sometimes what you're going to have is what we call a compression, where the market starts to come to you in the form of a compression. It's approaching your level with a compression. So what happened on I'll show you on USD Swiss. The market was just compressing, and after a compression like that, the market literally just dropped. Okay, so that's what we call CPLQ, compression plus liquidity. On the compression, then the market takes out the liquidity and then dropped. That's what happened. So I'll share all those examples. So this is the present. So here you are looking for how the market is trying to trick the retail traders into selling early, because at above this level here, when retail traders see this, they will see this as areas to sell from, and therefore when they sell here, their stop losses are going to be above there. And what happens is that the market is going to come here, take them out, then drop later on after taking out the liquidity above here. There's going to be a lot of stop losses above here, because most retail traders use support and resistance as their strategy. So and according to support and resistance strategy, when you have 2-3 touches, that proves to them that the market is actually, that level is actually strong. It's likely to hold. However, we know that when there are a lot of touches there, it just tells us that there's a higher chance of price actually breaking that level above, going to the upside, finding where the order block is, and then the market can drop. So here we have to be aware of the liquidity. We have to identify the liquidity so that we are not part of the liquidity. Is this clear?
Yes, it is.
Okay.
Yes.
All right. And then the approach. The last part is what we call the approach. So the approach is literally, how is the market coming back to your level? The approach. How is the market approaching your area? Okay. So usually you probably see the market breaking this resistance here. Most of the times, this market is going to be broken by a big momentum candle because of the liquidity which is above that level there. So we expect that the market can actually come to you with a big momentum candle like that. And people, when they see that, most retail traders, most breakout traders will actually now start to buy from here, and they will put their stop loss below there. And the market is going to push a little bit just to take out the liquidity and only to tap into this supply zone here, and then we see the market dropping even further. Okay, so the approach, it's very important how the market approaches your level. So usually they say that you have to make sure that the market is reducing in momentum as it's coming to your level, but what we want to see is this level being taken out by a momentum candle. That tells us that the market is headed to the tradable zone, which is this one here, the rally-based drop. However, what you don't do is you don't wait on the 4-hour time frame or the 2-hour time frame for you to see that the market is actually reacting from that level. No. If you do that, you are going to be late every time. What you do is, if you, for example, you are analyzing from the 4-hour or the 2-hour time frame, what you are going to do is you drop down to the lower time frame, what we call a top-down analysis or multiple time frame analysis. So if I'm looking at on the market around maybe on the 4-hour time frame, I'm going to drop to the 1 hour and 30 minutes time frame so that I can have my confirmation on the lower time frame. You go to the lower time frame, and what are you looking for in the lower time frame? You are looking for signs of what? Change of direction. You are looking for change of character in the lower time frame. Remember that the market is what? The market is fractal. Whatever is happening on the higher time frame, it will be reflected on the lower time frame.
Lower time frame.
Yeah. So for example, I'm expecting when the market is coming to my supply zone, I'm expecting that the market is going to be in an uptrend, right?
Yes.
Making higher highs and higher lows. How am I going to know that this market is no longer continuing in its uptrend? This is going to be evident by break of what?
Change of structure.
Change of structure.
Character.
Yeah. By breaking this previous what? Higher low.
Higher lows.
Yeah. So when this happens, when I see this happening, then I know that the market